But it's Michael Martin. Thanks for being here. So I got a lot of great questions the past week. I'm sure there's a lot of you out there who might be having a tough time with all this damn volatility. Who knows what the hell you're going to wake up to on any given day? It's pretty crazy, right? So one of the questions was, how did I go pro with a $5,000 account? And the truth is, I didn't go pro with 5,000. That's what I started trading with, and while I was inside a brokerage firm. So I kind of had to wear two hats and kind of live a closeted life, if you will, because during the day I had to look like in my Clark Kent job, a financial advisor, which I didn't mind. I liked helping people. It's just not what I wanted to do. So with my trading account, that's how I grew my corpus so that I could eventually go out on my own. Plus, I had clients that I traded for and did very, very well for. But then it got me thinking, like, what would I do today if I had a smaller account and I was looking to try to trade these markets and grow my money and become a pro and do the things that pros do? And I kind of talked about it but I didn't actually say it overtly in the live stream that you can see on the YouTube channel. If you click under the live tab, I did a live stream a while back, and I might do another one. It all kind of comes together if I can, if the people want it. So what I would do today, and this probably goes against the grain, but you asked, is I would find, the sleepiest little contract and start with that. You have to remember, when I started, the commissions were very, very high. They were 1% to 2%, depending on stocks or futures. So I knew I couldn't come in and be so active. I think a lot of you are coming to the table to think like, well, maybe I want to trade, stock index futures. And I've made up in my mind like that's what I want to do. That's also where a lot of failure is, right? You have to remember that 19 out of 20 people who try to trade in the short term don't make it. Those are the numbers. Don't hate me. So if I was going to try to trade in the short term, I wouldn't go do that. I would look at another contract that didn't have as much volatility, that was a lot slower, so that, for one, I could build my equity, but I could also build my confidence. If every day you're coming in today's environment with the market being very, very choppy, volatile, there's tariffs, there's all kinds of things, it's not a market where people feel safe. Investors feel safe. So you can see gigantic swings intraday. Now, if you're trained, by all means, knock yourself out. You can do a great job. But on the other hand, you want to be careful that you build your confidence and you build your equity kind of concurrently. That's going to really take you using real money, right? You can kind of paper trade, but I don't think it's quite the same. And you have to look at the money that you're trading as, people call it tuition. I don't think you need to risk a lot of money when you're out doing this. I think, so for me, I was looking at like corn and cotton and sugar. I traded the smallest things. For some of you, that might be mini or micro gold. I don't know, how big those might be, but I'd find the things that have the lowest volatility and the lowest like daily ATR, lower margin, so I could learn my craft. If you want to become a pilot, they don't start you in, an F-14. They start you with single props and they work your way up to handle, big jets. So I think what I would do is start small and learn the dynamic, get a feel for the market. Because then once you have a feel for one market, you can kind of learn how to have a feel for other markets. And by markets, I mean everything from MSTR, like that to me is a market, to corn is a market, to sugar cotton is a market, right? So you can figure out what's the best way to go about, how to handle your craft. Because that to me is the goal. Once you develop your craft, then you can worry about scaling, right? Because you'll be making more money, you'll have more confidence. And that's a huge part of doing anything in life, right? It's very difficult to succeed in something if you don't have confidence in yourself. And so, I get emails all the time from folks who are not terribly sure-footed in, what they're doing in the markets, and they're losing money there, and they have no confidence, and it's very difficult to win in those types of situations, right? I liken it to going into like here's one of my analogies again, going into a job interview where you might not have a lot of personal confidence, or you feel that there's other qualified people, or you're intimidated about the name of the company, because it would be a good get. Like all of that kind of comes through. And even though as a trader, you're probably at home by yourself or working off of an app, the markets can still sense fear, right? They say bees and dogs can sense fear. So can ticker symbols. And so if you come to the market with any type of trepidation, you might consider taking a time out and just trying to build your confidence in a small, humble way, whatever that might be for you. And so for me, again, it was a different environment. I chose to find something that I could get into, that if it did move, right? Because I remember study the prices or study the data, not necessarily the chart pattern, right? Because the chart stuff is easy to do because you click a button, oh, look at the pretty chart. There it is. I'll put some indicators. But that doesn't tell you, how to feel while you're in the trade. Because the commissions were so high, I knew I couldn't day trade. I didn't also want to, because I was trading in a branch where all the managers could kind of see my existing behavior. That wasn't going to go over well if they saw me doing 5 or 10 trades every day while I was trying to, build out my business as a financial advisor, which I didn't want to do, but I had to do it because that was my entry point into the business. You have to remember, there was no internet, there were no online brokerages. If you wanted to trade, you had to go with one of the major places. And that was it. So I kind of had to ham hock my way in. It was not optimal. I learned a lot. I met some pretty decent people who I'm still friendly with. There were some great, great guys and gals, mostly guys. And I can talk about that at length, but I don't, that's not really why you're here. So when you go with the sleepier contracts, it might not have the sex appeal, but what's your goal, right? Which is kind of the second part of today's discussion, is like, I think when you start to trade, it shouldn't be just like, I want to make a lot of money. You have to really think about how trading can serve you. Like, what do you want your trading to do for you in your life? Do you want the mental challenge? Do you want the self-esteem boost that you can get by saying that you're a consistently profitable trader? Which also means that you feel good on days where your setups aren't there and you let the day go by and there's no trades for you, because that's also trading. You don't have to be active every day to be a trader. So you really have to challenge all the marketing bullshit that you see online about what you think it takes to become a trader, because while what you might see is true, it's true from the standpoint that it's one speck of sand on the beach at West End 2 or in Santa Monica Bay. There are a million ways to do this business. So be careful on who you choose as your role model, because the way that they do it might not fit for you. It might not be a good emotional or psychological fit. Now, my approach to it all was, I was coming from a blue-collar background, and I knew I wanted to stop exchanging my time for money. So from day one, I always approached trading as a business I wanted to own, not necessarily a business that I wanted to manage. And that was tricky, because I did have to put in time to learn my craft. I absolutely had to learn how to manage risk. Something that helped me quite a bit with that was one of the most important tools that I've used from day one, and those are stop orders. I don't think I could trade if it wasn't for stop orders, because it allows me to take my eye off the screen. I don't want to be sitting there trying to act impulsively. I can do it, but it's not a good use of my time these days. You see, I don't get excited about that. So the feelings that you might have in your body about scalping, like, I don't feel the same way about that. I'm not saying don't do it. It's just that doesn't turn me on, right? It's just a woman I'm not attracted to. Doesn't mean she's a bad person. There's what is the advertisement says? There's someone for everybody. I just don't want to put in the type of time you have to put in to make that kind of money, right? I don't want to think small. So, and I've put in the time to be able to say that. So you have to take it with a grain of salt. You might be happy making $50 to $200 a day. Nothing wrong with it. If that's where you're at, that's where you're at. I had my sights set on something that was much bigger, right? Plus, I had to deal with the environment. We're all shaped by our environments, and who we have in our family, our nuclear family, especially the people you spend a lot of time with. They really shape you, whether you even know it or not. You're kind of always learning from your environment. Now, I knew my parents were Depression era kids, so I knew that I had to change from the Raymond Carver short story that I was living into doing things very, very different. And that's when when it occurred to me that, being in the lower middle class, it has nothing to do with your income bracket. It has everything to do with the behavior that you exhibit every day. You're middle class or lower middle class or whatever I was because of what I did in my behavior. My behavior could yield certain results. So I had to go through a complete metamorphosis and change who I was as a person, which was at the same time exciting. It was scary. I felt bad too, like I was rejecting my parents because I was kind of leaving a world that I knew, that I had been reared in by two really great people. I was best friends with my parents. But I just remember my dad was in a labor union, and in the 70s when interest rates went up, there was no more construction, so he was out of work. And we were sitting around like an actor waiting for the phone to ring. Like, that's no way to live. And I was like, fuck that. I'm not doing this. I'm not going to put myself in this kind of a deal where I have to wait for someone else to give me the okay to go to work, to make money. So I was like, I don't know how I'm going to do it though, but I know I have to do something different. And that was fantastically scary because I didn't have a role model. My father taught me some amazing things, especially how to have great character, give your word to people, and everything I needed to know about being a man. I couldn't have had a better father. He's an amazing human being. But in terms of learning like how to make money and be an entrepreneur and do that, I was shaped by in my environment. This is more of a personal narrative in a lot of ways, but it shows you how do you come to trading. So that's an important story to tell. When I can remember being, 12 years old, and I grew up in that period of time. I was in Putnam County in New York, and on our street when we first moved there, it must have been the summer of '73. That was like the first time I had gone to a ball game. I saw the Mets play, I want to say the Braves, in July of '73 at Shea Stadium. Doesn't exist anymore. That was my first ball game. And we had moved that month from a house we were renting to a house that we owned. And when we drove down the street for the first time, one of the first things that I noticed was, okay, there's a new street that's kind of cool, but there's a strip of grass in the middle of the street. I mean, that's what a hick town it was. And, there was two strips for where the wheels were, but there was a strip of grass in the middle of the road. I'm like, what the hell's that for? They're like, oh, the cars drive over that. So it was rural, man. I mean, it was Tom Sawyer, Huck Finn kind of stuff. It was very rural. But it was a great place to grow up. It was really great. And so I saw how people behaved. A lot of the folks who lived in that neighborhood and in that town were from the boroughs of New York or Westchester, in a city like Yonkers, or White Plains or New Rochelle. And they probably wanted to escape gentrification, to be frank. So there was a lot of Irish Italian who wanted their own house and wanted their own property. They wanted to have a backyard, right, where they could go out after work and sit out and have a beer, hang out with their neighbors, play, baseball, football with the kids, whatever. And we did that. My yard, we had a lot of property, so my yard was the stadium. We did everything. We played basketball, baseball, football. We did all the stuff in my backyard. And the lake would freeze around Halloween. So we could skate for 4, 5, 6 months because we were high above sea level. Anyway, I noticed like my friends and their parents, what they did. There were a lot of guys who were on the job, cops, firemen, guys who worked in unions. They were all hardworking, salt of the earth kind of people. but they all had to get up at 5:30 in the morning and drive somewhere. So I was like, man, these people are hardworking, and that was great because I developed grit. And going, like I said, going back to when I was about 12, for the things that I wanted in my life, whether it was like getting the cool sneakers or, you know, the cool jeans or whatever it was, like I pretty much had to get those myself. The hockey gear and sticks, that stuff wasn't cheap. It's even worse now, you know. Um, and so I was just thinking like my upbringing was very different from other kids in that I'll give you a great example of this. In upstate New York, you have four distinct seasons, right? You have a definite winter for sure. Um, you have a fall and a spring, and a summer. And I can remember that, the news would say, we're going to have, 6 inches of snow overnight, this and that. And all my buddies would be like, yeah, we're going to have a snow day. Because I lived on a big hill. So they would ski down the hill before the plows came. It was very interesting, bring out a sled, a toboggan. I was like, you guys are going to get hit by a car. Luckily, we didn't. I almost did once at nighttime, and it was crazy that I really went right in front of the car. I mean, it was within 2 arms lengths of where I was, and the car went by. I went by and down, because it was a bunch of hills that you could kind of parlay together. And I went flying down this hill, and I didn't even see the car. It was a blind turn. I was coming down a hill that was kind of to the left of my house, and I came soaring down this thing fast. I didn't even know a car was coming. Man, I could have gotten killed. It wasn't going fast, because there was a lot of snow. But anyway, my friends would be like, yeah, man, we're going to screw around. We'll go have snowball fights. We'll go outside and build igloos and this and that. And when it snowed, my mind was like, okay, I'm going to go to the Lynch house. I'm going to go to Napolitano's house. I'm going to go down to the Rice house. Like, I'm going to go knock on all these doors and say, hey, I'll shovel your driveway for $5. Minimum wage was probably $2 or something like that. But that's the way I looked at a snow day. I wasn't going to sit in the house and watch soap operas, right? There was no cable or game shows, Price is Right, dating game, this and that. Like, I was going to go out and start making money. So that was a huge part, like, in terms of how it shaped my mind long before I ever got to college or Wall Street, is that I was a hustler, I was an operator, and I was going to try to maximize my effort. I wasn't afraid to work. And like I said, my sister and I have an enormous amount of grit. We were hardworking from a very young age. And then at 14, I worked for a guy who had one of those big old Bobcats, the 3-foot deck lawnmower, that it was a belt-driven system. It would make your lawn look like, a golf course. And I was making, in those days, I was probably making between $25 and $50 a lawn. I could cut an acre of property in 20 minutes. Then the Bobcat had these big 8-10 inch wheels, and I'd roll it up these 2 planks in the back of a truck, drive illegally in my neighborhood to the next lawn down the street in this old stick shift on the column truck that had to have been like 1960 truck, like it was an old battle axe, like it wasn't going to hurt anybody. I couldn't probably go more than 15 miles an hour in it. That was growing up in the country. And so I hustled, and that was, a lot of money. And at that time, then I was making probably 10, $12 an hour cash. So after, by the end of the week, I was plush with cash. And that started me to start thinking like, hey, I can have my own business. I'm good, I'm not afraid to go knocking on the doors. I wasn't afraid ever to ask out the prettiest girl, if you know what I'm saying. Like, I'd go up to strangers and start conversations. I'd go to my friends' houses. They'd be inside playing pole position, and I'd knock on the door and ask the parents if they'd like me to shovel the driveway, and they'd say yes. And my before I could go shovel anyone else's driveway, I had to sweep the deck and clean my own driveway for my family. My father put his foot in my ass before I, and he wasn't overbearing like that, but that's the mindset. Like, you got the kids inside sitting around, there's 3 brothers, and I'm out there shoveling the driveway. That would have never worked in my house at all. So so my foray into the trading once I got there was like, okay, now I have to figure out how can I use my money, right? Because I had known the expression, you want to you can work for your money or you can get your money to work for your money. That was a complete foreign thing to me. All ever knew how to do was work for money. I had to exchange my time for some gig business or some hourly thing. I got out of the hourly game as fast as possible because there was no money in it. So the gigging business would be like, I'll cut your grass for a flat rate, cut your lawn. And I was going to like bigger estates, people who had substantial property, where doing it with a push mower would have taken 2 hours, and it would have been it was too much for these people. So I could come in with a 3-foot deck, like I said, cut an acre of property in about 20 minutes. Then, when the winter would come, I'd shovel driveways. Then as I got older, I found out I could make even more money, working down in Westchester County, caddying and also meeting new people. That was a big part of it. So that's where I got the job at the Mob restaurant, and that I work at night, and in the day I would caddy. So I was plush with cash, kind of working Friday night, Saturday golf course, Saturday night dinner, Sunday golf course, maybe Sunday night dinner if they were open, and all this and that. And then in the back of my mind, I was scheming like, this is great. I'm working, my body is beat to shit. I'm on my feet all day. Like, I'm a younger guy. I was in my late teens, in my early 20s. So I was like, this is good. You could get used to the money, but it's also a grind. Like, it's not a career. I knew that much as well. And I knew that I really wasn't doing anything different really than what my parents were doing by having a job, having a boss. And so while I knew I needed to have a boss or a manager, if you will, I had to think like I needed a way to make money and think of myself as doing white collar. And I had no damn clue how to do it. So having said that, I was really thinking about learning how to trade. And I didn't have the money to lose, so I couldn't go to the super volatile stuff. A friend of mine, Mark, was trading OEX options that would haul ass from the word go. And in those days, you couldn't trade S&P futures because they were $500 a point. It was before the E-mini, which became, whatever, 1/10 the size of the big contract. But the big, when everyone was trading the market short during the crash, that wasn't E-mini. They sold S&P futures, which I think had $40,000 margin, $40,000 margin per contract, and were $500 a point. So that was out of the question. So I was like, I got to do this in a safe way where I can't, buy and sell and kind of churn my own account, because it's going to cost me minimum 1% in, 1% out. I need to think of something that could move, something that could trend in a slow and steady way, where I could use time and the leverage that futures would provide me to grow my cash. That's what my mindset was, is like, I wanted to get better than real estate kind of leverage, right? In those days, you only had to put down 10% on a house. You could borrow the other, buy a house for $500K. You could put down 50 and borrow $450, and that would be your mortgage. In the futures, it was like you'd put down 3 or so percent. So the margins were like a couple $100. I was like, I could totally do that. I had a couple K saved up from, my work. So the background of how I came to trading, I think, had a lot to do with the decisions that I've made, because I didn't want to have to sit there all day and kind of mind the babies. So I didn't want to be a babysitter of positions. Stop orders, and I would sit and I would wait for the market to take off. So I'd have a buy stop order above the market, so that if the market did start to appreciate, it would get me in. Then once I was in, I would put in a protective stop to knock me out. I didn't want to get knocked out, but looking at the thing all day wasn't going to change. Like, a leopard's not going to change its spots, right? So that, just because you don't want to get knocked out doesn't mean you're not going to. So that was what sucked, because I didn't have enough money to lose, But I also know that I couldn't take a big loss because A, it would destabilize me financially, and I had to look busy to appease the bosses, right? So I had to be very, very practical and pragmatic about my approach to, to trading. It was a very different environment. But by taking home like the open, high, low, close data and putting it into a spreadsheet, I would say, okay, here's where I got in. And if I got in over here, so let me take a step back. What I would do is I'd get a historical chart from the system that we used, which was an old Unix system. It was not that great. But what I could do is go see the data. So I would copy it down into a notebook. I'd take like, when no one was looking, I'd spend a couple hours, especially at night, and say, okay, here's a market that's broken out and had made new highs. What would I have had to have done in order to be in this trade? Like, where was the good place to get in? But then living with the trade while the risk was on, market to the market, and show on a spreadsheet, because again, all the stuff that you're used to right now didn't exist. And to do it all by hand. So I had Lotus 123 on the computer, which was the prevailing spreadsheet at the time. I'd go back, put that information in to the computer and say, okay, if I bought one sleepy little corn contract at $1.90 and it was moving in quarter point ticks, and here was where the drawdown was, what would that have done to my equity? And kind of think in advance, like, okay, what would my emotional state would have been, right? That was a big part of my paper trading, if you will, was not just how much money could I make, but if I was to stay in the trade to take advantage of the whole move, how can I calibrate my emotional constitution to be in moves like this, knowing that I can use my main tool, which was a protective sell stop below the market, right? I don't say stop loss. I say just protective stop below the market, so that if the move was over or if there was going to be a wave of profit taking, it would just come and knock me out of the trade. I'd have to, settle up those commissions, but here's how I would do that. So that was kind of like my paper trading and what I had to do to learn how to, be in the business. Is I didn't go after like the moth to the flame to like, oh my God, I'm looking at the Magnificent Seven, and then some of these larger, names like MSTR or any of them, those like that, they would never be on my radar. I knew what they were, and it was hard not to. We didn't have really memes because there was no internet, but you had, so many. You still had, John Dorfman, who was kind of like the Kramer before. Dan Dorfman before Jim Cramer became Jim Cramer, and Maria, what's her name from Brooklyn, Bay Ridge, Maria Bartiromo. They were all kind of starting, so it wasn't the cottage industry. You were really out on your own, and I don't say that to be like, oh, you're so proud of yourself. It was just like you need to understand the environment that I was in, because otherwise you're just like, well, why didn't you just do this? And the truth is that the day trading game and all of that, empowering people, got your shit all set up, like that didn't exist. I've watched all that evolve from kind of day one. So I had to kind of do it all by hand, which kind of made all the difference, because like that's the Robert Frost poem, right? There's come to a fork in the road, and I could have stayed, because in those days, I'll be honest with you, that was the early to mid 80s. I was probably making 3,500 to 5K a month hustling, waiting tables and caddying golf bags when I could. Like I was working all around the clock, and that was cash. And I was like, this is great. I'm doing a good job. I caddied for the club champ. I caddied for a lot of people whose names you would know. And the restaurant paid very well too. But that was mostly because their money was like ill-gotten gains, right? They were coming in, who knows how they were earning it, but then they didn't spare any expense when they would come in to dinner. They would just drop in hundreds of dollars. So, I could easily do, on the weekends, I'd probably make 500 a weekend cash. but I was still on my feet. I was grinding. So while I wasn't worried about making rent and I had ample savings, I was still paying my own way through school. I was paying my own rent. I had a car up until I was 18, and then I sold it, which was stupid. I should have. You don't know these things, but it was a Chevelle Super Sport. Who would have known that now Mopar muscle cars would have, mean anything. But and then I moved when I moved to the city. I didn't have a car for a long time. I was just on foot. But that all kind of shaped my thinking. So I say this as in a way to kind of help you understand your own behavior, like your experiences in your life that led you up to trading are still going to play a role in how you think about trading. You see, just like mine did, and they still do. So be mindful when you try to think about your trading strategy that you don't turn trading into a blue collar job, right? There's a way to do it, and there's a way to stay with your winners for longer periods of time and let your money grow, right? That's the old adage, right? Use time and leverage to your advantage. If you have to sit and babysit the market all day, that could, without a trading strategy, you could become induced to do otherwise stupid things with your money. Doesn't mean you're stupid. It just means that you can be induced if you're kind of always going to the shiny ticker, the one that's up or down a lot. So that's how I started. Is I started with the small and the slow and the stuff that was like as painful as watching paint dry, because I knew I wanted to have staying power, and I knew I needed to have kind of like a scrimmage, right? It wasn't paper trading per se. It was more like a scrimmage where I was at the same time learning my craft, but it was like a scrimmage in a football game. You're not playing a team that's in your league and it doesn't count on your record, but it's still full contact, right? And they're going to run plays and they're going to try to defend, and you're going to get hit. You might get hurt, right? But it's kind of a friendlier atmosphere. You're still kind of playing to win, but it's not like something significance on the line. So I deliberately geared everything down to say, okay, I don't know my ass from a hole in the ground. There isn't anyone here to help me, and I'm just going to have to learn how to do this myself. So, I'm very proud of the fact that I hit a goal that I set out to do. But I would definitely borrow from that, and I would find if you want to be a great stock index futures trader, by all means try it. But if it's becoming too volatile for you and you can't take getting knocked out frequently, go try to find a smaller contract in a different commodity, right? Or go, like I've said before on the show, buy 5 or 10 shares of a stock and really learn to get a feel for a particular instrument where the move isn't going to make you a lot of money. If it moves sharply against you, you're not going to lose a lot of money either. The goal, I think, for you at that stage would be to learn your craft, learn how to manage risk. The scaling up is kind of the easy part. What's going to matter most is that you say, okay, I can add risk and I can remove risk in a way where I can see the positive expected value of what I'm doing. So it makes sense for me to follow my rules. That's going to build your confidence. And then once your confidence builds, you can gradually scale up and trade the thing larger. But you also have to be kind to yourself, because this is a hard market for pros. You don't know what's coming out of the president's mouth on any given day, and the markets can make a hard right or a hard left in a moment's notice. So, take it easy on yourself that you are, you will be shaped by this environment, and some of you might do very, very well with the volatility. I was good at reading people. And so I was eventually able to take that ability, and by observing about 1 million instances of market data and names and tickers and stocks and futures trades, I was able to kind of learn how to marry the news, the story, right, the whisper and the rumor and all that kind of crap with market behavior, as well as like the fundamental research, and kind of say like, okay, now I can see convergences and divergences, not from a MACD standpoint, but like the whole world is looking for this thing to go up. Really, really good news hit the tape, and the stock is only up 50 cents. Either everybody knew this, it wasn't the secret that we all thought it was, or that there were a lot of people kind of selling into that strength. And a lot of times after that, you'd see the name drop. So I learned to develop my instincts, but you have to start in a way that's bite-sized so that you don't overdo yourself or lose too much money and become discouraged, because that is something that you can control. You can control where you want to set your thermostat, you see? If you come in being like, I need to make a lot of money quickly, I think you set yourself up for failure and for frustration, because if you do that, you're just likely in the right place at the right time. It's not typical, right? There'd be like 2 in a million have that natural ability walking in the front door, but very, very few. I always go think about like Michael Jordan and Wayne Gretzky. They had super God-given talent. They also worked their asses off with that talent to make sure that their talent wasn't wasted. The work has to come in too. Kobe Bryant, right? So Serena Williams, you look at any of those people, they put in an enormous amount of work on top of whatever ability they were born with. And they acted intentionally. So I think learn your craft first and see, because ultimately your trading is gonna be a reflection of your personality. So my trading looks like that of a person who builds positions and wants to grow his business, right? I don't want to open and close a subsidiary, because I look at like sugar or cocoa or MSTR or an options trade, whatever I have on in the portfolio. I look at those as little subsidiaries of Michael Martin Incorporated, right? So it wouldn't make sense to me to open up a business one day and then close it at 9 to 5. That's not what I wanted to do. I wanted to amplify my cash with my not being there. Like, I want other people to do the work. Who were those other people? My stop orders. My stop orders became employees that I didn't have to pay, who would stand sentry on the position and say, if the name trades at or through my stop price, I'm gonna get filled. Now, sometimes you get filled at the stop price. Sometimes you get filled a tick below. Sometimes you hit your stop and you get filled a tick above. I don't get that nuts about slippage and skid. I don't think you should either. It's not the point. I never use limit orders either, by the way. So all of those life experiences shaped me and helped me become the trader that I was to become. Now, once you're a trader, you will also evolve, because the markets are going to change. Sometimes markets are going to be sleepy and quiet and there's no real movement, there's no volatility. Other times they're going to be, going gangbusters and you can't miss. Other times it's going to turn into sideways and very, very choppy markets that are volatile but with no real direction. So you have to learn to adapt, and there's ways to definitely do that. We talk about that in all the mastermind stuff. Is like, how do we know, if we look out if we look out through our windshield, what kind of market environment are we in, and then what's the best tool to take advantage of the environment that we're in, because the environment is the reality. Now, and if you show up as a carpenter, but we need masonry and guys who can lay down house frames, foundations, you're going to be out of work for a while. So you have to figure out, like, what can I do? How can I make money with what I know how to do, given the environment that we're in, which is the reality? So that poses another type of a challenge, which is why I say learn your craft first, and then sit and have the patience to know, like, if it's not your day, forcing things, it's not going to be there. You make a bad situation worse by, jumping in and trying to do that. I'll leave you with this. It helps also to have goals. Like, I didn't know anything when I started, but I knew I wanted to be a business owner of trading, in that type of mindset, to grow my money as fast as I possibly could for the amount of time that I had, with the commission environment that I had, and the other things that were buzzing around my head at the time. So I had a very clear vision of who I wanted to become. I didn't know how I was going to get there. But having the vision was very, very important because people say, "Oh, you should have wrote a business plan." Yeah, but business plans, in many ways, aren't really even worth the paper that they're on because there's too many variables. There's a fantastic amount of randomness that could come in and play a part in the decisions that you make. So I even coach to this. Have a vision of what your point B is in the near term, and then just take one tiny step in that direction. It might not feel good, but it's going to be new because behavior predicts where you end up in life. So that's what I did is I tried to exhibit the behavior of what I thought, and when it didn't work, I tried something else. So the analogy is try to take step number 1. You'll figure out what step number 2 is once you get there, right? So I had a clear vision of who I wanted to be and what I wanted it to look like. And I also had a goal for where I wanted my money to go. What would make sense for me? In other words, if you look back over several years and said, okay, for all the activity and the time, money, and the effort that you put into your craft, right? Are your results, what substantive enough to justify what you're doing? So you really have to set 2 goals. But with the goals, you get to look backwards, and then that kind of starts you on your path. Like, what is it that you want trading to I don't want to be that busy trading every day. It's not where I'm at. Young people like that. It's not my deal. So I'd rather make my money grow in a way that requires less oversight. And I manage all that risk with stop orders. But I think if you start with a goal, like a vision of where do you want to be, and then as a percent rate of return, not dollars, right? Pros think in percentages, not dollars. What percent rate of return would be a good goal for you based on the reality of what you're looking at, the market, who you are as a person, what skills you have, right? And pull it all together that way. Anyway, I appreciate you all being here. If you have any questions, I reply to everything. Leave a comment. Please like and subscribe. And if there's anything you'd like me to cover here or discuss, I try to speak about things that I've actually experienced, not what on hunches or hypotheticals, because I have a lot of experience. I'd be very happy to help you on your own journey. Have a great week.